Hi, and welcome again to another edition of Market Analysis for today, December 18th, 2023. My name is Giovanni Benacourt, analyst, trader, and educator with Vantage Markets. All right, well, it is the last full week of the trading year, and a wrap of economic data, including inflation, housing, and jobs, and GDP is coming. The only thing that seems to matter is what it all means for the timing of the first Federal Reserve interest rate cut. Now, cuts tend to be good for stocks, and if the Fed has to keep rates higher, that's probably bad for stocks. But recessions also tend to be bad, and the inverted Treasury yield has been seen as a warning sign for an economic slump for almost 2 years. Now, the gap between short-term yields and longer-term yields has widened substantially over the past few months. Speculation that rates will stay higher for longer briefly pushed the 10-year Treasury yield to 5% in October, almost closing the gap completely with the 2-year note. But now the yield is back below 4%. In the meantime, the 2-year yield has dropped to about 4.4% from 5.2% in October. One reason an inverted yield curve is considered a predictor of recession is because it implies that the Fed will eventually cut rates when inflation slows and the economy weakens. One obvious way for the yield to uninvert in 2024 is if the Fed cuts rates dramatically. If they're dramatically the cuts, right? So driving down the short end. Now, the market sees more than 1% point of Fed cuts, plenty to make up for the 0.4% point gap in short-term and long-term rates now. Now, this path is probably good for stocks, but there's also a risk that longer-term rates go higher because inflation is sticky and the Fed doesn't cut that much eventually. Yields will settle with the long end higher. Despite the worst inflation in a generation, markets have maintained confidence that the Fed will rein it back in. Chairman Jerome Powell does not want to lose that faith. And with that being said, let's take a look at what we can expect then out of the markets. So I'm having my resistance at around 17,000, a psychological round number. We have opened with a small gap up on the NASDAQ. We closed positively on Friday. So those two things added, we could probably speculate, because our job is to speculate, that the continuation, this move will probably continue, but not by much. Okay, so 17,000 is that round psychological number. Now, if for whatever reason we happen just to continue declining or retreating from making this move today, on a Monday, then initially that 16,800 could be again the support level, but I have mine at 16,600, which is kind of almost revisiting the low from Thursday, December 14th. So that's for the NASDAQ. I will go along with the push to the upside in the early morning. Then we have the S&P, the same token. Let's see if we will meet 4,800 initially, but I have my resistance at 4,820 right above that, but 4,800 could be that target. If we do happen to do a pullback, retracement, then we can speculate to revisit that low from Thursday. The Dow, however, is the one that has been more of an uptrend rally with a lot of momentum from it. We are in a new territory, so anything from here is called, it can be used as resistance, any number. So initially they went up to 37,750-ish. Let's see if will we meet 38,000 this week? That could be one thing to look at. Then we have crude oil that is in a tear. It is moving parabolically, moving higher. So let's see if we reach $74 today. I'm long on crude oil. Nat Gas also opened with a big gap up. So let's see if we can come back up to this triple top created in the last week of November. As far as gold goes, okay, gold is looking to sustain itself north of 220 of 2020. Let's see if we will just be trading within Friday's range in long on gold. Silver is also looking to recuperate itself. It's holding around below $24. Let's see if that will be the case. Copper is trading down. Let's see if we reach 380, or we'll just here make a retracement and go back and revisit today's same high. So that could be one reason. Then we have Bitcoin that is looking to stay between this 42,000 and 40,000, that channel in there. Then the currencies are looking to trade higher. Let's see if the euro will reach 109.50 or go back to 110, and the pound come back to 127 or even higher. And that will happen along with the metals to go higher and the currencies to go higher if we see that the dollar index just plummets. If we see it continue, we need to break, come in and trade below this 102 psychological support level for it. So if that happens, if we trade below, start trading below 102, and then we'll see a nice pop higher on metals and currencies. That's it for me today. Have a great trading week, and I'll see you tomorrow.